Alright guys, welcome back. It's Wednesday and we are very close to a very important, I would say one of the most important, well, not the most important, but one of the most important events this week. That is the FOMC meeting, right? And the rate decision. Quite clear what they will do there. They will pause the rates. But do you know what's next? That's the big question. What is next for the FOMC, right? I've been telling this so many times. Actually, I've just, broke it down US economy bit by bit on the Telegram channel. You can see on those prints here, I'm going to send David so then he can show you guys to see if you're not there, what are you losing? All right, that's the truth. I'm not being like, oh my God. No, this is the truth, okay? Because if you were there on my webinar yesterday, that was such a cool webinar, very relaxing, very nice, with nice people around. Thanks for everyone that's been there. You would have the link to come to my Telegram today, and it had all of the US breakdown. But anyways, as I'm your friend and I want to help you guys, I'm gonna do the breakdown here for you as well. So let's start it with I'm gonna read the message I've sent, so then you guys can see that I'm not fooling. So first, let's do a rundown on US economy and then what I think for the Fed, for the FOMC. It's going to be 5 a.m. this morning for Australian time. I will be awake on this one because it's a very important one, but usually I don't wake 5 a.m. Today I woke up at 5:30 because I had a meeting, but that's it. So I'm pretty sure the FOMC won't be changing interest rates this week, even though the economy has been performing better than expected and the job market is strong. Indeed, it is strong. We had 336,000 NFP numbers on NFP last 3 weeks, so beginning of October, right? Just before the war begins, true. So that fulfilled, the movement down, but then it just ranging bound the whole October. They want to see how the recent increase in long-term interest rates will play out. I think they will stick to their plan of gradually making borrowing more expensive and then might increase rates by 25 basis points in December. So the big question is, are they increasing rates now or they're not increasing? Well, in this image here, we can see the CMA Fed Watch 2, and we can see that more than 96%, 97% of the market, it is already priced in a pause again from the Fed, right? But this pause is widely expected already. So what will be the big take? What I'm saying that it's so important. The biggest important for the FOMC meeting this week will be the rate statement as well the speech from Powell that will be 5:30. So when he comes live, and do the speech for everyone, we need to pay attention on what he will say, very close to growth of the economy, projection forward of inflation, as well as next month rates. Most probably some journalists will ask him in the end of the question and answers, like what will be the forward guidance for the rates for next 13th of December, right? And then he will have to say something. So we have to watch very close these answers. Now, my opinion, 25 basis point next month. Next month, December. But definitely we are very priced in for a pause in November, right? I go ahead and say that the spending picked up in September and also it went up in August, which suggests that people are still spending money even though the economy has had its ups and downs. As well, we just had this morning the consumer confidence. I think it was 5 a.m. for me in Australia time. And it was higher than expected. So that shows me that consumers is still confident on spending their money into the retail. When I say by retail, I'm talking about buying iPhones, buying cars, buying groceries, buying whatever you usually daily life you buy, right? So if consumers are still spending on that pace, then we may have a 0.4 or 0.3% inflation in December. So this is all adding up for a constructive hike from the FOMC. I would suggest that for next month, but not looking to hike this month. If they do this month, then they won't be doing it in December, and then the market would shift, and I think it would occasionate even a bearish move, not a much bullish move. Anyways, last thing is that Powell have mentioned that the only thing that it's making him a bit cautious about the economy is how fast the yields, the bonds are going up, right? I've sent this image here on my Telegram, and we can see how quick the bonds are going up since last month, and this month is kind of consolidated around 525, 517, right? So if it keeps going up and up and up, then the Fed may not hike the rates definitely, because it's too high. The risk appetite is too high then. All right, so this is my rundown on US economy. Now you know what to expect for this morning, 5 a.m. I wish I used to live in Europe, so then I would be awake to see those things. But anyways, guys, please subscribe to the channel, give us a thumbs up on this video, share this video with your friend. You know, maybe he, she, or have someone from your family that likes to trade. This is definitely a very good rundown on US economy, not because of me, but I guess it is a helpful knowledge to have. And if you want to be on my Telegram, don't miss out next Tuesday webinar then. So be in there, so then you can have the link. All right, I see you guys tomorrow, and have all a good trading FOMC ahead.